So thank you all for coming here. This discussion is all about taking that mystery out of how do you buy a house. I hope some of you are here because you haven't bought a house and you would like to learn how to do that. And I suspect that some of you are like me. I bought my first house in 1999. Things are very, very different. So just giving an idea of what those changes look like, how does that process work, and connecting you with people who know that process in its current form. We've got a great panel today and plenty of time for questions. And thank you, our panel. I'll get you guys to come over here. And Chris Laxton in the back will be our moderator, and I'll let him introduce our panel.
Hello, everybody. I'm JoDee.Lambert. I'm with United Bank Mortgage. I have been in the mortgage world for over 30 years. I'm trying to help people get into a home or build a home or whatever suits them. And I'm just glad to be here and see if we can answer some questions and maybe dispel some myths on what it takes to buy a home.
Hey everybody, Steve Sutton, Sutton's Professional Home Inspections. This month makes 21 years of full-time inspecting, thousands of inspections and unique properties I've seen. Here to discuss inspections and what you may expect.
Hi, I'm Vicky Painter. I'm with C&F Mortgage Corporation. I'm kind of telling my age, but I've been in the mortgage business for 47 years. And I've helped a lot. That's right. That's right. Started then. So I'm here to do anything that anyone needs. I love first-time home buyers. Repeat business is very meaningful to me. And the fun part is when I'm doing loans right now for the grandchildren of the people I started out with. But please ask me any questions at all.
Hi, I'm Shaquadia Howard. I am a real estate agent with Old Dominion Realty. I have been a realtor for 5 years. I was in the mental health field for a little bit less than 20 years before getting into real estate. And I'm just happy to be here today to answer some questions and just connect with you all. Let you know a little bit about real estate and what the market's like right now and ways to get into homeownership.
And my name's Eric Fletcher. I'm with Property Management of Virginia. Been a licensed sales agent, but focusing on property management for over 20 years. And I guess I'm kind of here to, if buying isn't a good option and you have rental questions, I would be the one to direct those to. So, good afternoon.
Let's start with a super basic question. If you guys are familiar with Tolkien and the Hobbit, he initially did not want to go on any type of adventure because his life was so comfortable. So let's start with the first question. Anyone can take this one. But why pursue homeownership? Why would that be something we would encourage people to do?
So for me, home ownership, one aspect of that is building equity. It's the fastest way to wealth. It's the #1 equity builder for anybody who's building wealth. You cannot save at a rate that your home can appreciate, so there's a builder factor in there. The other part that I would say would be you're controlling your rents. You know, rents go up, same as mortgage, but I mean, if you're locking yourself in on a 30-year mortgage, you're controlling that a little bit, which you cannot with your rents. And of course, the freedom to do whatever you want with your home as well.
I agree with everything you just said. I think if it was me and I look at what the rental prices are today, anywhere between $1,700 and $2,000 to get a house. If you're going to do that, why not do it for yourself instead of helping the landlord? Let's get in there, and people don't understand, but there's so many different types of financing out there that some of them is actually cheaper to get into buying a home with the upfront money than it is for the long-term rental.
Just one note of housekeeping. We have one more guest that I want Michelle to be able to introduce herself as well, so we're going to pass the mic back there. Pass it down.
I had a heck of a time finding a place to park, and I'm afraid I'm going to get towed. But I run late as a rule anyway. But anyway, I'm Michelle Knuckles with Alcova Mortgage. Is that all you need to know about me?
Just tell us a little bit about what you do.
Okay. Well, I've been in the business. Well, actually, I started with Vicky when I was a kid. So I've been in the business for 40 years. I'll let you know how long she's been in the business. So, I mean, she's like the
We both started young.
Yeah. But anyway, I've lived in Augusta County my whole life. Got 2 boys and 4 grandchildren, and I don't know. I just love my life, so back at you guys.
And I'll add one thing on the why pursue home ownership and really pursuing home or ownership or renting. You know, home is our foundation, it's our security, it's the place that we center our lives around. And so whether it is a stable rental or whether it is the security of knowing that you own your own home, it provides a sense of like a stake in your community that you really can't put an equitable value on. It's a very important thing for our community, our families, and our lives. And so I would add that.
And I would just piggyback on that as well, especially coming from the mental health field. Home is where everything starts. And just like Eric said, it's a stability.
People who rent enjoy being able to call a landlord when an appliance isn't working. What would you say to the person who wants to start with the wealth-building aspects of home ownership, but may be scared off by the responsibilities of home ownership?
Oh, Steve Sutton.
Listen, homeownership is a huge responsibility. Things break. It's going to happen. You know, there's always something that needs to be done. You know, you fix the leak, and then your AC goes out. You fix your AC, you know, you need a new dishwasher. I mean, but you know, you are investing in this property. So that's the way you have to look at it, because in 10, 20 years, you're going to sell it. So, and that being said, anything you do to your home, you should look at it with an eye towards resale, in my opinion. So, but there's always something that needs to be done. There's no such thing as a perfect home, even for new ones.
I would add budget.
I would add to that budget. You should budget for repairs, whether you're renting or living in a home. You should budget for those unknown things at all times, regardless of your housing situation.
One of the things that I do when I'm qualifying someone, especially someone who's been living at home and paying no rent, have no money in their bank account, and yes, that does happen, it's normal in our world. You need to be sure when you're getting your house payment that you're going for your comfort zone. Because you have to prepare for the utilities that has to be paid. You have to, nobody ever tells me. Normally I don't even use a microphone. And you have to prepare, so you have to look at that and say, not only do you have your house payment and you have your utilities, but if anything does go wrong with the house, you can't make that phone call that you've been making. So you need to start putting money aside for anything that does have to be done to that house. And that's really important to tell them about that up front before they go into the situation.
And this question comes up a lot for buyers that I work with. And one thing that some buyers that I've worked with have done is home warranties. I know that sometimes some buyers feel like they may not work, but we research home warranty companies that will work for what the buyer needs, and you can customize it for what the home needs. I mean, whether you just need a basic warranty or you have an elevator in your home and you want something like that. And so that has been a little bit of comfort for some buyers as well. And so that's another option. Getting a home warranty, so those appliances, those major systems, those things like that can be covered at a lower cost to the buyer.
And I would add that it's important, everyone up on this panel, this is our livelihood, and of course we're looking to make money in our professions and our careers, but this kind of guidance is the kind of guidance that you're going to get from established, reputable professionals in your community. We may be able to qualify you for a loan and spit you out the door and get a commission, but we do more than that. We talk clients through things and make sure that they are prepared for these contingencies so that they are going into things with their eyes wide open. The last thing that I think anybody wants to see is somebody get in over their heads and find that they're failing to achieve, that kind of stability that I spoke of earlier. So I think having a sense of community around the professionals that you seek counsel from is important.
Beverly, if you want to come here, we're gonna switch seats here.
Hello, my name is Beverly
Stermer. I apologize for being tardy. I had broken a tooth and was coming back from the dentist. Good day. Anyway, I am a real estate agent with Real Broker, and our office is located here in Staunton. I've been a realtor since 2013, and Staunton's been my home since, yes, early 2000s.
Next question we'll get you guys to weigh in on is, what is one practical step someone can take right now, whether it is financial, educational, or mindset related? Where is the starting line for homeownership?
Right here.
Expand.
Well, I mean, right here. It's ironic. I always think of the phrase, if I have to explain it to you, you're not going to get it. People that take the effort to come to meetings like this are taking the first steps that they need to pursue homeownership and to get the knowledge to embark on that path wisely. So I would say that events like this and speaking to people that you see up here, those are the first steps.
But yeah, no, I mean, getting pre-approved is the first thing to figure out what kind of financing you qualify for and what's going to be the best route for you to go based on what you owe, what your credit looks like, and how much money you got to work with. So it doesn't have to be a daunting process. It's actually fairly easy. You can do it in a short amount of time. You just have to have your documents together, things like pay stubs and W-2s or tax returns if you're self-employed. So yeah, it's really fairly simple to get started with right folks.
But for someone who might not even know where the pre-approval process starts, who pre-approves? Like, where do you go?
That's where you come to Vicky, right? Or JoDee, gosh.
I know, I haven't seen you
Yeah. So yeah, check out one of the three of us.
Which do what? What do you three do?
Well, we're all mortgage lenders, doing construction loans, first-time home buyers, jumbo loans, renovation loans, purchases for your primary residence or investment properties.
Well, your second homes,
Yes.
anything we need. The first thing you've got to do is get a hold of a good lender. A lender that's going to take the time, that's going to guide you through it. The very first thing I do is tell them to go to my website. In my website, they fill out their application. And this is probably with all of us that do it the same way. The very first step to me is know what your credit is. You would be amazed at how many people have no idea. Not only do they not know what credit scores are, but they don't understand what scores they have to have. So if, as a real estate agent, which they don't do, but if you take them out without being pre-approved, you've earned nothing. Because that person may think they've got an 800 credit score, and unfortunately they may have a 500 credit score. So the first thing to do is to get in touch with a mortgage lender and let the mortgage lender, mortgage broker, mortgage banker, and let's get you started. So we know with the credit-wise, and every one of us that are in the mortgage business, we, again, want to get you in a home, and we'll tell you what you have to do to be able to clean up your credit to get you to where you can get into a home.
Can I add just a little something to that?
Aside from the pre-approval, there are counseling agencies out there, so like home counselors, Virginia Housing Counseling, and things like that. And that gives you a lot of information on budgeting and learning a little bit about the lingo and so forth as well. So those are resources for you too.
Yeah, so, and you guys can correct me if I'm wrong, but a pretty simple way, if you're one of the people who is trying to figure out like, okay, I'm not so familiar with how credit score works, is you may be good with your own money, but a credit score is saying how good are you with paying back other people their money. And so it's something that the fact that you stick to your own personal budget may not show up on your credit score. It's how you've treated other people's money that's going to base your score. So while we're here, we'll just go ahead and jump around a little bit, but what kind of credit score is a good thing, and how do we get ready for the pre-approval process? What gives you the best chance at being successful when we walk in your door?
Different lenders will have different guidelines on that, but for the most part, they're pretty consistent. For us, we don't do anything below a 620 620, but you're gonna pay for those, so you're gonna pay with a higher rate and less favorable terms. So if I see somebody who's got a credit score below that 620, I really want to counsel them on working on their credit, and bringing that up so that they have better opportunities than taking, more immediate loan that's gonna put in a pickle. And then certainly, using credit conservatively, don't max out your cards, try to budget, that kind of thing.
What happens if you had no credit score? We went through a period of time that if you had no credit scores, we couldn't do loans for you any longer. But that has changed. So the credit that you think you're handling properly, that may not be through a credit scoring thing, can also help you with it. We're limited on where we can go with those loans, but we can do that. I can do loans down to a 580 credit score, but the people have got to qualify with the payments on that, and they don't want to have a lot of judgments, collections, or anything against them, because we're going to end up with having a manual underwrite, which is going to cause problems on that. A manual underwrite means the machine we use doesn't underwrite the loan, but the underwriters. And most of our loans have to go to a third party for something if you're under the 620. The 620 meets into the criteria. But where people need to understand it, where we have to counsel them, is based on what their credit score is and the type of loan that we're doing is going to tell us what interest rate they're going to be getting at. Because, of course, the higher your score is, the better interest rate you're going to get, unless you're doing the first-time home buyer loan through Virginia Housing. Virginia Housing doesn't care if you've got a 620 credit score or an 800 credit score, you're going to get the exact same interest rate. But the majority of our loans throughout our industry is 100% based on credit scores.
Michelle, you want to add anything? No, I got bored into that.
And we'd like to hear from all of you, and just quickly, if anyone is interested, if you get the Credit Karma app, you can know what your credit score is. There's usually 3 people that provide that score, and you can look at 2 of them at any time just by downloading that app and walking you through. So.
That is not.
I would say we should
Yeah,
chime in on that.
It's nice to look
Yeah.
at that, but I just went through the refinancing process, and that was about 100 off of the entire process.
Yeah, well, let's get you to weigh in.
Let's let Michelle weigh in.
Yeah, because that's true, that's very true.
I was gonna say, we'll share the wealth.
Yeah, usually it's, usually it is off. It's a different scoring mechanism. So a mortgage report is going to have a different scoring mechanism. The data that's in those reports is usually right. What they reported as far as your balances and whatnot was right. It's just a different model. So what we find is that the mortgage scores don't match what you see in Credit Karma. Credit Karma makes you look like your score is a whole lot better.
And they only actually give you 2 scores. We're going to use 3 scores. We're going to throw out the high ones, we're going to throw out the low ones, we're going to go out through the medium. Yeah, but Credit Karma, the only way that I actually use Credit Karma with my people is I say, okay, your score with me is 630. Your score with Credit Karma is 700. There's 70 points difference. You can look at that to see where the difference is, and it's normally going to be that much difference in it at all times.
Yeah, so there's only been a time or 2 where I've had somebody that's been right on, but that is few and far between, and I don't know why that is.
So what would you recommend for knowing your credit score?
The only way you're going to know for a mortgage is to have a mortgage report.
Right.
That's really it. So it's going to be a different mechanism.
And that's not to say that Credit Karma is not a good tool to follow and use your credit score and see how it's moving. It absolutely is. And it's probably one of the better tools out there, I would say. But it's not going to be accurate for a mortgage.
I would say whenever we're credit counseling, probably all 3 of us tell people to watch that.
Uh-huh.
Yeah, watch for the data.
Yeah.
Especially if we're counseling somebody and having them pay something off or pay it down to get their score up. We don't want to run another mortgage report, so we'll have them watch Credit Karma to see when it hits.
Exactly.
And then we'll know.
So it used to be that every time you looked up your credit, if you had too many lookups, it would ding your score.
Not
Is that
if
no
you're
longer
doing it
true?
yourself. If you're doing it yourself, you won't get hit at all.
Okay.
So that's not a problem. The other good thing about Credit Karma that's really good is anybody checks your credit, you're gonna be notified immediately. If something gets paid off, you're gonna get notified immediately. If there's anything weird happens to your credit report, you're gonna get notified immediately. If I pull a credit report on you within a half hour, you're gonna get notification, Credit Karma, that somebody pulled the credit. So that is really good for that.
Thank you for your input. Let's go to what's one myth about the housing market right now that you would like to bust?
The myth right now is that the market's too high. You don't, yeah. Prices are too high. You've missed your opportunity. You need to wait for prices to drop. The industry motto is the best time to buy a house is always yesterday. So the sooner that you embark on that journey, the sooner you start building wealth. It's just like any market. It's not timing the market, it's time in the market. And so you don't try to really play the ups and downs, which generally are minor. The trajectory overall is up. And so I think that's a common myth, is that people they think that they've missed an opportunity. Correct.
I think that you are absolutely right. And another thing is that what I explain to a lot of buyers is that usually when interest rates are a little bit higher, the overall price of the homes are a little bit lower. And so that's kind of what we're seeing now. So some of the houses, when we had a 2-3% interest rate, we didn't see houses for $200,000, or those houses needed a lot of work. And so it really depends on whether or not you want to pay more for the price of the home, or you want a lower interest rate. But as far as the lenders, and you all can kind of chime in, some of those payments were about the same when you think of a higher interest rate and a lower price for the home, or a higher price of the home and a lower interest rate. So
The best time to buy a home is always when you're ready. That is the best time to buy a home. It really is, when you're ready.
I was going to say that too, because I know oftentimes you'll hear people say, oh, no one buys houses in the dead of winter. Like, I've bought and sold personally, I think 3 houses, in January and February. And people are always moving for other jobs and that type of thing. And don't discount, word of mouth. If you let somebody know you're looking for a house that's around $250,000, tell everybody, because I know between myself and my realtor friends, we have different Facebook groups, we all know about someone's getting ready to list a house. But just, make sure people are aware of what you're looking for, because more than likely there's someone out there getting ready to sell that house that you might be interested in.
What was the question?
I'm happy to.
What are the myths?
What is one myth about the housing market right now that you would like to bust?
My job is market dependent, but I'm more on the technical side of things, structure and whatnot. But one thing that is always true is you always need an inspection. Especially with new construction, it doesn't matter that it's brand new. We're going to find something. But I would think that's a myth. Like new houses don't need inspections. That's definitely not true.
No, you need to explain.
Okay. So specifically, what I see on new construction are just improper construction methods, improper installation of materials, which avoids manufacturer's warranties. Those products will fail eventually. Just recently, I did a house that I inspected. It was brand new 5 years ago. I inspected it. Came back, actually pointed these things out 5 years ago. Came back, and you can see the result of these improperly installed materials. Like literally siding falling off the house. And it's a $500,000 home. It's like, that shouldn't happen. I can go on and on about the things that I find.
But for someone who is just here for the first time, they're learning about the process. We've kind of fast forwarded a little bit to where you come in, but why is it important that they don't skip this step?
The inspection step, for these things that we find. The inspection is going to point out things. My inspections have a rating system, so some things that are minor, marginal, or significant. And usually those significant things, the agents can use it as a negotiation tool for reduction in price, or just go ahead and get it fixed. So as a homeowner, that's out of the way. Does that answer?
Does the homeowner know what to prepare for? Like your roof, I have 5 years left.
Exactly, yes.
So-
Yep. And I would even go in for homeowners, I'll do pre-listing inspections, so they can put the house on the market and say, we found X, Y, and Z, all of it's been repaired, replaced.
So, just for someone who may be just compiling information, when do you usually come in as the home inspector?
When the offer has been accepted, normally, so then they give them like a 5, 10, 15-day window to get the inspection done. Once the offer is accepted.
And you don't absolutely have to, so what is the most common reason that people don't?
Well, it costs the inspection.
Well, to make your offer more.
Right, yeah.
Competition,
I
yeah.
guess an offer without an inspection is more attractive to a seller.
Yes, unfortunately, for the buyer side, I mean, it's horrible, especially during,
During COVID, we saw that so much, and I hated, I cringed, like, I did not write any offers without a home inspection, attached to it, because that's the biggest purchase of your life, and you're really gonna risk, $300,000 house that, your foundation's getting ready to crack, and, there's so many things that could go wrong and be a huge expense down the road, so always get a home inspection.
Kara, your hands up.
Yeah, are you guys still, so I tried to buy a house
Yeah.
in 2021 a couple of times, and every time we put an offer down, it failed because somebody else came in without an inspection. And as first-time home buyers, we did not want to do that, right? And so we said, that's it, we're not even in the market anymore. So we're trying to start again. But are you still finding that people are submitting a lot of houses?
Not as often, and I tell you, one thing that I started doing, and I know other agents did it as well, you'd see if Steve's available, I'm gonna go show this house today or tomorrow at, 4 o'clock. Can you meet us there and just kind of do just a quick walkthrough and see if anything just kind of sticks out to you? Is, the roof really bad, or is the foundation? Like, the big thing to me are foundation issues and obviously electrical issues. I always think of anything that can do harm to you or more harm to the house. Those are things that we would want to have addressed. But to have just as you go through the house for the first time, to have some really good eyes on it, just to let you know, like, oh, this was one you probably don't want to tackle. Yeah, you probably don't want to tackle as a first-time home buyer.
I think it depends on the property. Well, I think it depends on the price range too. I mean, most first-time buyers, are you guys not still seeing multiple offers? Because it seems like we are.
Yeah.
And that is the unfortunate thing with first-time buyers. I
Yeah,
mean,
houses
that
under
is,
350 for sure.
yeah, those are the ones that really need it are the ones that are getting kicked out because of some inspection. The high-priced homes, I don't think you see this much.
Right.
You guys? Yeah.
I would definitely agree with that. The homes that are 350 and below, we're still seeing multiple offer situations. But I've had some buyers that I may have to write 15, 20 contracts for before we can get something to stick. But you don't want to forego a home inspection or appraisal waivers or things like that. So the right house will come along, having your real estate agent look at things outside of the market, so maybe listings that haven't hit the market yet, maybe things that have been on the market for a little bit of time, some things that you can have some flexibility with, maybe a way that you can have some success.
And I say also to make your offer more attractive. If you include that home inspection contingency, you can also ask your real estate agent to contact the listing agent and say, what are the sellers looking for? Like, if the sellers aren't planning on moving or don't want to move for another couple of months, would you be interested in renting that house back to them? I mean, there's all kinds of other things you can negotiate, not just price, but what's in it for the list for the seller as well.
Follow up to what you were saying about people that skip the home inspections to get those offers in 2020, and by 2020, 2021, I went back and did more inspections after the people closed and found significant issues that would have been discovered during the inspection. So,
Can you kind of give one example?
oh gosh, I found significant structural issues that were probably $50,000 worth of repairs. These people, they wanted the house, they overpaid for the house because they wanted it so badly. And then, I'm in the foundation, in the crawl space, and it's like, well, your foundation is in really bad shape. And it's probably $50,000 worth of repairs that could have been taken care of or negotiated somehow during the transaction.
Sorry, can I just ask one more thing?
Karen, you may.
Thank you. You mentioned maybe having to do 15 offers, right? So that's obviously probably going to take a lot of time. Does that affect your credit? Because like, how long does the pre-approval last? And do I have to worry about?
Your credit report is good for 120 days. So when you get that, the main thing we tell everybody, if you're, I do anyway, if you're getting close to that 90-day mark, the time that we ran your credit report, then I just need to make sure. The main thing we're going to tell you, every one of us, is once we qualify you, don't go apply for any credit, period. You give somebody your social security number, they're pulling your credit. And it's a hard pull no matter what you do on that. So your main thing is if job changes or anything, with me, I ask my people to keep uploading their pay stubs, keep uploading their bank statements, because that way we can keep up with what's going on.
But you don't necessarily have to pull their credit and go through the whole
Credit
process.
report is good. Now, if I'm into, let's say, my 95th, 100th day, I know the loan's not going to close because that credit report's going to expire. And I'm going to say, we need to run another credit report. Are you okay with that? But your credit reports are good for 120 days, but the time you close has to fall in that 120 days.
I do not do that. If you have, I mean, this is just a difference of opinion, but
if I've pulled your credit, everything's status quo, your income hasn't dropped, you haven't moved your credit or anything like that, until you're actually ready to sign on the dotted line, I try not to pull your credit again. So if you're just looking at numbers, I may get your pay stubs, I may update your numbers, assuming that you're honest and that everything is the same. But when you get to a point where you're ready to actually sign a contract and offer, you know, they're probably going to want to know if that's got a really good chance of going through, because I don't want to keep hitting your credit either. But you definitely need to keep things status quo. And we would probably update your income just because rates change every day, interest rates change every day. So your numbers can change just by virtue of rates changing, even if you keep everything the same. So we may just look at it that way without hitting your credit unnecessarily. We try to just be conservative on that.
We do it a little bit different.
Yeah, I try to be conservative on it. It just depends on your situation. If you're borderline, I want to keep hitting your credit, you got an 800 score, I'm not worried about it. It's a little bit different for everybody.
I mean, that is the thing, as long as nothing changes,
Yeah.
then you're gonna be fine. But what we do is, we might do a soft poll. You know, if you're looking at 15 houses, yeah, we might do a soft poll, just to see that everything is still okay, that doesn't hit you, but at least lets us know that everything's good. And then once you're ready, then we do the hard poll. So soft poll, I've not seen where a soft poll does not have all the information that a regular report does. It's just we can't run it through the systems. Some investors will let us, but some first-time buyer programs will not. So yeah, we just kind of check it on the back end, just in case, you know, that old lady electric bill from 5 years ago all of a sudden hits collection that you don't know about. So yeah, we kind of keep track of it that way. So I think we all kind of do it the same-ish. Yeah.
Thank you.
And that's where Credit Karma could potentially help you, make sure things aren't moving.
So if you know there's something you've been dying to get once you close on a home, wait until after you close on a home to get it. Especially any furniture thing you're thinking of, make sure that happens after.
No new car.
Especially no new car, that's right.
Furniture.
Yeah.
So here's a question we would love to have you all weigh in on. Are there neighborhoods or property types with examples like townhomes, condos, etc., that new buyers might be overlooking but should consider?
I think oftentimes first-time home buyers have I want 3 bedrooms, 2 baths, you know, quarter-acre of a yard, a fence, and that kind of thing. But I think oftentimes you get into a house that you probably maybe can't afford, even though you may be qualified for a certain dollar amount. No one wants to be house poor, so sometimes either their prices right now might be similar, but sometimes townhouses or condos, those homes might be best for you because you don't have to worry about the maintenance and the upkeep. So, those are things that I would encourage people to look at as well. If you're not willing to, or if you think you're going to hire someone else to cut your grass for you, but with your mortgage payment that's really going to push you to the edge, there might be other homes that you should consider as far as a townhouse, condo, those kind of things.
From an inspection point of view, maintenance is a huge issue. A lot of that's mostly exterior, like roofing, siding, things like that, usually covered. So as a first-time homeowner, if something goes wrong, you just contact your COA or HOA and it's taken care of, usually.
One of the problems with townhouses and condos are HOA fees. Yeah. And that can make a big difference in what somebody is paying. Also, in our area, we've got a lot of condos that have not been Fannie, Freddie, FHA approved. We can do it on a one-to-one basis, but we need to know where they are and whether or not that can be done. So that's the thing you need to really look at on things like that.
So, for someone who's just brand new to this process, Fannie Mae and Freddie Mac, we might not even know what we're talking about. So can you kind of explain?
Yes, I can. These are where our loans get sold in the secondary market. And so all of our loans, I don't think any three of us keep our loans within our own doors, do we?
We do.
You do? We don't. Ours are all sold. So they have to be what we call the secondary market is what we have to do. And that's whether it is a conventional loan, a first-time home buyer through BHDA, or a government loan. There's certain criteria that the property must meet in order to fall under those guidelines. So what I do when I'm talking to people and I know what type of loan, I normally try to tell them when they go to look at houses, what to look for to make sure that those houses are going to meet the standards that we need for them to meet. So when you hear anybody say Fannie, Freddie, or government, they're all because the loans are being sold in the secondary market. Michelle?
Well, I think if you hear somebody say condo in our area, you do need to beware. Because most of them, what they have is called a pre-sale requirement. So, meaning, do you know if Clay's place on Morse Mill Road?
I just got one.
You did?
I just,
So is it
I
over
had to go
50%?
FHA because
Okay.
conventional would not do it, but I was able to get it FHA approved, is the only reason I can answer that.
Yeah, they have this pre-sale requirement where what they don't want is they don't want investors to own more than 50% of the whole unit. So until it gets to where it's been sold to where actual tenants own it, not tenants, but home buyers own it, more than 50%, then it becomes available for most financing types. So that is one thing. The condos around here, there's not many that meet that for a first-time buyer. There's options for them if they don't meet the pre-sale, where you have to put 20% down, but I don't think that's really what we're geared towards here today, is it? It's more towards if you've never done this before, type of thing.
I would say that your first home might not be your dream home. So I work with a lot of buyers that kind of overlook homes that are not exactly what they're looking for or not exactly where they are. So just finding a good starting point, something that has good bones, something that you can build equity in. I know we've kind of thrown the word equity around, but I work with so many buyers that they purchased a home, they stayed in it for 2 or 3 years, and then they had, especially this past few years, they've had $60,000, $70,000 in equity, $100,000 in equity, and they were able to get into exactly what they wanted.
Oh, Jaquadia, do you want to tell your own story? You do. She does. Tell the story about the dressers. This will help people that are looking for the first time.
Yes, so before I got into the real estate market, I found a house in Staunton that I loved, all on one level. It was just perfect. The bedrooms were a little bit smaller than what I wanted. And I had one nightstand that would not be able to fit in this room. And this home came around like 3 times. And each time I went back and I looked at the house and I said, I'm gonna have to put my other dresser in the garage. That home has sold, and I mean, this was just in like 2017. This home is sold every 2 years for at least $50,000 or more. Every 2 years. So, yeah, that one hurts. Every time I see it, one night stand. So.
I'll piggyback on that and just say, I tell people all the time, buy something to get in the game. Houses appreciate, it's amazing in our area. You hear these horror stories back when the market dropped and all, and prices dropping. But those were in giant metro areas. We might have gotten a little stagnant around here, but I don't think we had a big drop. And it recovered fairly quickly within a couple of years. So for our market area, appreciation on houses has just been fabulous. I mean, it's been a great investment.
So where else should people be looking besides Zillow? And I want to, reporters are supposed to never put questions together, but I will ask, as we answer that, what are steps people should take before they even start scrolling Zillow? And where else should they look besides Zillow?
I look for sale by owners. Sometimes I have a lot of luck with for sale by owners. A lot of times, if buyers see that a home is not listed with an agent, they don't feel like they can purchase it because it's not listed. I'll reach out to the seller and I will ask if they are interested in working with a real estate agent, and we will go through the transaction as we would if it had been listed. So that has been a little bit of a sweet spot. Sometimes I run into sellers that are not really looking to make a lot of money off of their home. This home served us well, and I just want to I will sell it for this amount. As long as all parties agree, a lot of times that has been a real win-win for the buyers and the sellers.
And Steve says yes.
I just want to say, and I'm not even a realtor, but I want to say the best way to find a house is to get yourself a real estate agent. A realtor is the professional that can get out there. They can call the FISBOs. I call them FISBOs for sale by owner. They can look and see when something comes on the market. They're going to be the first to know. And it seems like the majority of the realtors have this thing with their computers. I don't understand computers real well, so excuse me. But when everything that come on the market, it sends out to their clients that they know what price they're looking for. Zillow, Realtor.com, Zillow shakes me up a little bit because a lot of times the information they have on there is 100% incorrect. And a lot of it is the monthly house payment. They're always figuring the payments as if somebody put 20% down. No mortgage insurance, the cheapest interest rate they can find. And so I have a lot of people that look at that. So I think the main thing to do is get yourself a good realtor and let them do the hunting for you, and it saves a lot of steps for you.
Well, while we're there, can we just also explain debt to income ratio and the PMI while we're talking? Because that would be something that people who are first-time home buyers might need to understand.
Yes. Michelle,
It's broad. That's a broad.
That's a
very
broad.
It's very broad.
I was trying to dodge it actually.
Did well.
Well, so so the debt to income is basically, well, not basically, it is your monthly debts. This doesn't include your health insurance or utilities, but things like credit cards, car payments, loans, plus your proposed housing payment. And most programs don't want it to be more than about 45% of your gross monthly income. So, but we can push that. Or it can be lower, but that's just kind of a standard rule of thumb, is you don't want those things to be more than 45% of your gross monthly income. There's some programs too that have just a housing ratio, meaning they don't want your house payment to be more than a certain amount. I would say that most try to keep that below 34%, just in general. Just kind of a rule of thumb. Does that make sense?
What's PMI? PMI is private mortgage insurance. My wording for it for most people, it used to be years ago when I would say private mortgage insurance, everybody thought it was life insurance. It's not. It doesn't do anything to protect us, the mortgage company. That on a conventional loan, if you don't put 20% down, you're going to pay an extra fee to be able to get that loan because of the mortgage insurance that's there. And it's again based on credit scores and the loan to value that we're looking at. Once you put 20% down on a conventional loan, the mortgage insurance is done away with. But if you're doing a government loan, such as an FHA loan, Federal Housing Administration loan, that mortgage insurance is going to be on you for the life of the loan. So there's a lot of things, but if you don't have 20% down, there's financing out there, you're just going to pay a different premium on it to have that type of loan.
It's what allows you to put less than 20%.
I know, I agree.
And that's another place where your credit score is important. The better your credit score is, the lower that premium is going to be.
What is the ideal credit score? Just while we're here, that's not my next question, but what is the ideal credit score? And Eric, I'd like you to, because this impacts how people rent as well. So I would love everyone to kind of just chime in on where you're hoping people are when they come through the door.
I would say if your credit score is above like a 720, that's kind of mid-range, and that's going to open up your options. The higher it is, the better it is. But above a 720 is going to be not too bad, mortgage insurance, rates, etc.
If I'm doing a loan that's not a Virginia Housing Administration loan, I'm going to say that I agree with that 100% because of the cost. If it's a Virginia housing loan and I'm doing a government loan, not a conventional loan, as long as I have a 620, you're going to have the exact same interest rate and mortgage insurance on a government loan as you would on anything else. So that's what I kind of look for.
Yeah, same. I think ours are going to be more in the 640 for governments, and then over 700 for conventional. So we're on the same page on that.
For rentals, it's a little different, but as you would probably assume it to be, it depends on what it is that you're seeking in terms of what we're looking for in credit scores. Obviously, the higher, the more options that are available to you, and just like anything else, there are people out there that'll rent you a place with 0 credit score. Likely that the rent's very high and the property's not that great. They're trying to leverage their risk, and that's how they do that. So typically, most of our rentals, we have a threshold for our apartment rentals of about 600, and then single-family home rentals start at about 650. But at the end of the day, the better credit score you have, the more opportunities that are afforded to you, and the less in premiums and fees that you're going to suffer because of the increased risk that lender assumes that they're taking on. So.
For somebody who's listening in and trying to figure out, okay, I either need to know what my credit score is, or I might have some work to do. What are the factors that impact your credit score?
Timely payment of your debts.
And ratio, your high balances to credit limits is another thing that's very impactful.
Your high credit limit versus your balance. For instance, if you have a credit card with $1,000 limit, you owe $50 on it, that's fantastic. If you owe $990 on it, that's a negative on your credit. So those ratios matter very much on credit cards. That's not an intention credit. And of course, collections. If you have collections, they're very detrimental, collections and judgments.
I actually agree with everything JoDee just said.
Are there local, state, or federal programs that help first-time homebuyers with down payments or closing costs? Give us all the resources.
Oh, that's a lot of resources. Who wants to take it first?
Well, you've got VHDA, which does a lot of grants. We have our local housing authorities that you can go to that has spark money available. That means on spark money, if you're doing a VHDA loan, your interest rate can be lowered by 0.5% or 1%, depending on which income bracket you're in, but it is based on income, and you have to go through all of their stuff that they require, but they're very good about explaining all of that. About twice a year, we get money from the Federal Home Land Bank, and that is fantastic because that can be 10 to 1,000, 12,500, 15, 20,000. The only thing that happens with that is as it comes, it goes very, very quickly. So you have to have the people ready for it. And I tell my agents when I'm dealing with that to make sure they put the clause in the contract that they have to get their federal home money on that. That money comes about and it's gone we had 2 million this year, 20 million, and it was gone so fast it was unbelievable. I did 5 of them for the first time that I've gotten that many in at one time, but I had everyone ready for that. There are other grants out there that I really cannot speak on because they're grants you really have to go do a lot of your own research on and find out what is out there. Virginia Housing has grants, but again, it's based on your income. So much of the stuff is based on income, and that's again the reason why we've all said you've got to get pre-approved first to find out exactly which programs that we all have that are available.
Kara.
So what I just heard you say was that if we come to a mortgage lender, you're gonna help us figure out where to go. Is that right? Like I don't have to do all
Except for the off-wall ones. The off-wall things we can't really help you with. But if you look at me and say, Vicky, I want that 12.5 from Federal Home Loan Bank, I'm gonna look at you and say, I don't know when it's gonna be out again. It typically comes out the same time, but you never know. And it's all depending on when the government allows it to go out. And right now we can't depend on anything, so you don't know. So, but we can tell you it's available, but I don't want to qualify you based on that money in case it's not there.
When you do your pre-approval, all of us are going to be looking at that. What's out there for you, what grants are available, what free money there is for you, et cetera. So we're going to be looking at all of that for you. And then in addition to some of the things that Vicky has mentioned, we've got some local nonprofits that have some funds available too. You've got here locally, you've got Central Shenandoah Planning District Commission has a grant. These are all income-based. All of these programs are income-based. So you may get kicked out because of your income being over the amount. That income base is going to be based on geography and household size. We've also got CERCAP we hope to have them here today, but they're not. But they also have some grant funds available. And one of the programs they have, they're out of money, they're hoping to get back, is they actually had a program where they could help pay down some debt. So if you had like $1,000 collection or something that was holding you back, they had a fund that they were able to help you pay some of that stuff. They also have some programs to help people in a home with repairs to a home and things like that. So there's a lot of programs out there. And the other thing that's good about grants is you can stack them on there. So like the Virginia Housing Grant, you can layer that with the FHLB grant, and you can layer that with different programs and stuff. But all of them are going to have income restrictions, and unfortunately those can be a little low at times.
I wouldn't base your house hunt on the federal home loan grant.
None of us.
Yeah, I would not base your house on the federal home loan grant because as soon as it's there, it's gone. So, yeah.
Well, and all these programs, relying upon them may be unwise.
It's all in timing.
Yeah.
If you're there when it's there, then you got a good chance. But even then, you might not have a chance.
And know that a $20,000 grant may move your payment $50. It sounds like big money, but $20,000 over the course of a 30-year loan is not the big money that you think it is. So as Michelle said, absolutely don't base your house hunt on that. It's great if you can get it. It's free money, great. But
I agree with that 100%.
I don't know if this is in line with what we're talking about right now, but suppose someone has student loans, and they're either maybe forbearance or deferment, or is that really going to affect?
Yes. Definitely.
Yeah.
And right now, the one thing we're running into with the student loan, I'm sorry, I feel like I'm taking over, I'm sorry. With the student loans, is a lot of the student loans have come due, and a lot of people are not making those payments because they're taking it because they think it's the deferment still notice, and they're not making their payments, and that's affecting credit something fierce. But any student loans you have, the majority of the loans we all have, we're going to count 0.5% against you. So if you've got a $20,000 student loan, I'm going to count $100 against you in the payment, and we have to do that because back in 2008, when they kind of ignored the student loans because they were in deferment, all of a sudden people started losing their homes because the student loans became, and all of a sudden all this money had to be paid out. So yes, student loans can definitely affect you.
Yay!
So, one thing that we had mentioned earlier was about equity in the home. And like, that's not just something that benefits people down the road in the future, but can you talk about some of the things people might do with the equity in their home currently when they run into a financial need or have something they want to do?
I know, on the spot again.
Well, so here's the thing with equity. I mean, until you actually have it, you can't use it. But let's just say that you want to build a garage, or you want to pay off debt, or you're getting a divorce and you have to pay off an ex. You can use your equity to do those things, but it's usually limited to 80% of the value. So that 80% is to pay off what you currently owe, and then anything on top of that is what you have that you could use for home improvements, paying off the ex, taking a vacation, whatever it is you want to do with it. Does that make sense?
Or less desirable things like medical situations or something like that.
I think one of the common things of our generation is because you can Google things, people Google things, but it doesn't mean that you'll get good information when you Google things.
Dangerous.
So when someone comes, and obviously they're probably going to have done their fair amount of Google searches before they ever have the courage to come see one of you in your office. What are some good resources for research online? And what are some, like, how would you know, like, hey, maybe this isn't the most truthful resource? Like, how would you advise people who are going to go home and probably do some Googling before they reach out to you to do that well?
Reach out to us.
Reach out to us first. Reach out to us. It is free. Do not do that. Do not.
I can't say it enough, advice is free. We give it all day. We will give you any information you want. And I'm really big, I feel passionate about this topic, but Google's great, but there's a lot of bad information out there. And truly, advice is free. And there's so many good lenders in our area. Of course I'm like, pick me, but truly, we have great lenders, we have great realtors. You don't need to go online. There's plenty of people here. And if somebody is going to prosper and do well in our community, I want it to be somebody in our community, not somebody out of Texas or California who's online. So use your resources. You have piles of resources here, and they are all so willing to help without costing you a dime.
Can I ask a question about ARMs? I'm on a 5-year ARM, and when I say I'm on a 5-year ARM, my parents collapse on the ground in fear. And do you want to talk about the difference between that 30-year? Because when you go in and look, they're going to give you all those options, and those ARMs are sometimes really cheap. Cheap is not the right word. Less. Do you want to talk about how do you feel about ARMs and all of that?
There's nothing wrong with an ARM. So an ARM is an adjustable rate mortgage, which means that your interest rate usually is going to be fixed for a period of time, and then after that, it can go up or down depending on where rates are, where the market is at, versus a 30-year fixed rate is fixed for the whole life of the loan. It's not going to move. The only thing that can move your payment would be your taxes and insurance adjusting. There's nothing wrong with an ARM if you go into it with eyes wide open and you understand your risk of where that can move. I don't think an ARM is necessarily the right step for a first-time home buyer not putting any money down. You don't have equity in there, and if things move, potentially that's going to be a burden, and maybe you don't have the equity to refinance into a traditional program. If you're putting 10, 20% down, you've got more flexibility when that ARM comes due. If you did need to refinance, you'd be in great shape. So if you're getting an ARM to afford a payment you cannot otherwise afford, I don't condemn that. I don't think that's a good move for you. So look at something that you can afford. But if you're getting an ARM because you know that I'm not going to be in this house 5 years, I'm going to be moving, I'm going to be relocating, maybe I've got 2 kids in daycare, they're gonna be in school within 5 years, and I've got more open and disposable income. Those are reasons to potentially look at an ARM, but don't ever do it because you can't otherwise afford your home, would be my feedback on that.
I agree with that. I agree with that. I agree with that 100%. In 47 years, I have done 2 ARM loans. 2. I don't like them. They are good if someone's coming in and they're going to be out pretty soon. I have local banks that are telling people, well, if the ARM continues to go up, you can refinance it. Well, let me tell you something. If the ARM rate is going up, the fixed rates are already there, so it's there. Right now, I don't know about everyone else here, but I'm seeing that the ARM rates are only about 0.5% lower than what the fixed rate is right now. And I'm going to qualify you at whatever your rate is plus 2. So you're qualifying at a higher interest rate to start with. And I feel like if you're starting at 1 interest rate, you have a 2% yearly cap, which means that it can go up 2% at that first time that it adjusts. But you have a 5% life cap. It can go up the whole 5%. You can end up with 11% interest rates on that if you're starting at a 6% fixed rate. So you really have to know what you're doing and be comfortable with it if that's what you're going to be doing.
I would quantify that and say they're not all 2%. You can have a 5-year ARM that jumps 5% at the first adjustment.
Exactly.
A lot of credit unions do that, so understand what your potential risk is.
Yeah, no, I mean, we don't do any first-time homebuyer ARMs. But there is a place for them with different kinds of programs. So, I mean, we're doing a fair amount of 7-1 ARMs right now, but that's mostly on investment properties. So not for first-time buyers. Agree with everything else you guys said?
I agree with that too. I mean, I do ARMs too. You just need to, it needs to be the right situation and the right reasons for it.
So, I'd like to close the moderated part of this discussion by asking each of you to give one piece of advice on the following. In your experience, what is one piece of advice you would give to someone who wants to buy a home within the next year? I'm just going to pass it all the way down. I'm going to slide it to the back and get a couple of pictures of you guys for later, for posterity, and then we'll open it up to Q&A. So we'll start here and work all the way down to here.
All right, repeat that question one more time.
In your experience, what is one piece of advice you would give to someone who wants to buy a home within the next year?
I would say start that pre-approval process and know your budget. Know what you can afford, what kind of money you may or may not need in the pocket, and be able to know what you're comfortable with. Even if I can afford, I can qualify you with a $2,000 payment. If you're only comfortable with $1,500, then know what you can buy with a payment of $1,500. So start that process and know what your comfort level is and where you want to start looking.
I have 2 things to say. Obviously, 1, get the inspection, but also 2, use a realtor. I cannot stress that enough. I've been in real estate inspections for 20 plus years, and I would never do a transaction without a realtor. You're very welcome.
For me, the biggest thing is to make sure you get pre-qualified or pre-approved for a mortgage. That's the #1 thing, because without that, you have no idea what you can afford, and you'll just waste your own time and get frustrated and waste the realtor's time and the seller's time. The other thing is, I guess, is to keep your expectations, not to say low, but what they are for the market. Like right now, we still are competitive in houses that are under $350,000. And so if you have to write 10, 12 offers, just expect that and know that you will eventually find the one. But just don't get your hopes all built up on that one offer, on that one house. There's plenty of houses out there, and like you said, if this isn't your forever home, your first house more than likely is not your forever home.
I agree with getting pre-qualified, pre-approved. That credit report is the most vital thing to do for us to be able to tell you that if you're not at the score you need to be, what you need to be so that you can be at that in a year from now. And sometimes it does take that year to get there. And as long as you listen to the professionals that tell you what to do, you're gonna be okay. And the main thing I'm gonna do when I qualify you is everyone needs to realize when we qualify, we're qualifying you on your gross income, but you live on your net income. So that's why it's so important to know where your comfort zone is. And if you're paying no rent right now, and you're going to end up going into a $1,500 or $1,600 a month mortgage payment, I'm going to suggest you start putting that $1,500 away so that you can make sure that you're comfortable with that payment when it does hit you. That way you're going to know for sure.
I would say be proactive. Proper planning prevents poor performance. So even if you want to purchase in the next year, reach out to a real estate agent. I'm not just saying use a real estate agent because I'm an agent, but even interview real estate agents. If it's a year and a half from now that you plan to purchase, just being proactive, sitting down, having a conversation, so that you can get a feel for whether or not you're going to mesh well with your agent, and so that you can start the pre-approval process, and so that you're not finding yourself navigating the home buyer portion of this in a reactive kind of way. You don't want to wait until you're 6 months from signing a lease, and then if something comes up on your credit report, or you're not able to purchase when you would like to. So just kind of being proactive about the whole process.
I think coming to bounce off what Vicky said, in addition to the pre-approval, let's just say you're paying $1,000 a month in rent, and you're most likely you're going to end up paying $2,000 a month in a house payment. Go ahead and plunk that extra money in the bank every month to see how it feels for you for a few months. You're not only saving, but then you're seeing how that works within your budget. Take that extra $1,500 and pop it in there, and just see how it feels.
I think all the technical advice in regard to that has been given, so mine's a little more philosophical. I think anytime you're establishing a goal, you're evaluating how important that goal is to you, the risks and rewards of pursuing it, and what you might be willing to sacrifice in order to get to that goal. I know when I bought my first house, I had 3 roommates. And they brought all sorts of pathogens into my home. But that's what I was willing to do in order to establish home ownership. And so I think it's always weighing what you are willing to give up in order to achieve that goal. And so I would encourage you to think about it and think about how you want to weigh those things.
Hold the mics right there. We'll get some Q&As going. All right. Show of hands. We'll call it. Yes?
Okay, well, I'm going to start out by saying I want to share my opinion, which is free and worth every penny of it. But I believe that there is no such thing as free lunch. Earlier, the discussion centered around, okay, so if you have an aversion to taking the risk of a client's failing or whatever, then you might want to consider renting, or if you have the aversion of having to do exterior repairs, you buy a condo. Well, guess what? The owner, the landlord, is assuming that risk, but who's paying for that risk? Not him, in my opinion. Okay, so my question to you is, am I off base here? I mean, in other words, are the landlords actually assuming that risk free?
I think that was directed to me, or at least it's my ballpark. I think as a property owner and a landlord, I always say property owner because landlord has less Scrooge McDuck connotations to it. Property managers are assuming all the risk when they're handing over an asset to a third party. We're running the risk that it gets damaged, it gets destroyed. I think that's why I have a career, is because so many private landlords have these terrible experiences that they can't financially recoup from. So yes, do the tenants pay for it? They do. But ultimately, I'm left with whatever those results may be. And that's all factored into the rental rate. And I guess, again, we try to mitigate our risk by selecting well-qualified applicants, which brings in the credit score, which brings in all these other factors. But that's what goes into determining a rental rate. And granted, I should say that there are some landlords out there that'll just squeeze the market for every last cent they can get out of it, and they don't have any option. Where are they going to go? I'm going to rent it for $2,500 a month. I think that in application, most property owners and landlords place a value on their property that they feel is within market norms in order to mitigate the risk and, in essence, also make a profit on their investment. I think that's the way that we play the game. So,
I think Dave's point being, like, you're not risk averse just because you play it safe. You're just paying someone else to take the risk.
Right.
yeah,
Right.
yeah, I think that's an accurate assessment.
And I guess to piggyback on that, as a lender or a real estate agent, wouldn't you want to advise your customer of that?
Absolutely.
Oh, yeah.
Yeah.
We do.
I always say you're buying a home, you're either buying yours or you're buying the landlord's home.
Yeah.
But you are buying a
Exactly.
home.
I do the same thing.
Well, and the reason I asked that question is it didn't come out to me when we had that previous conversation. It sounded like this is a great way to avoid risk, but to me, it's not. It's the opposite.
I can see.
Yes, I have a question. So, as a senior, let's say collecting like a pension or Social Security, how does that factor in as opposed to having, when I was younger, and having, income from the
It's
employer?
absolutely fine.
It's the same?
Yeah, it's the
fundamentally?
same, it's
Okay.
the exact same. We have to qualify you just like we do someone who's not. The only difference is on someone who's getting Social Security and things like that, we can end up, if they're not paying taxes on it, we can end up grossing that income up, so it makes it a little bit better for them qualifying if they want to do that. But there can absolutely be no discrimination in any way, shape, or form on anyone's age or anything. We just have to have that we can show legal income coming into the household.
Yep.
I just closed a loan, 79-year-old first-time home buyer.
Oh,
Yeah.
wow.
And it was fantastic. Yeah. So
All the time.
Yep.
He was in the military for many years, and he was retired at this point, had not bought a home because he just moved around so much, etc. Wasn't sure it was a good value, so we actually did some market analysis and look at appreciation numbers for our market that he was looking at and all of that. And he decided it was the right time. So that was a special transaction. I was very enjoyed that.
More questions?
I'd just like to reiterate, all the information's been great. But one of the things people need to be aware of is when you talk to your friends and family, we had 30 years of interest rates extremely low. It's a strange bubble. So when people say, you may talk to your brother and he says, oh, AMR is the way to go. And, 20 years ago it was, and it paid off. But that's why you need to talk to people who know what the market is now and things have changed.
I agree with that 100%. Talking to some of your friends and family is like Googling. Don't get the facts.
It's outdated.
Very outdated.
I'm sure he can tell you all the dads who come to the home inspection. And I have a few things to say about that.
Also, my realtor, we put in our, not contingent on the inspection, but inspection for information, and then we still pulled out when we found mold in the house, right? So it doesn't have to be a firm statement in the offer, from my understanding. But the main thing, you do an inspection, because Virginia is inspect buyer beware, right?
Correct.
If you're in other states, the homeowner does an inspection day one, and you have that report.
I'll let your realtors answer that, but I'm sure it's all in how you write that contract.
Yes.
It definitely, I've written multiple offers with home inspection for buyers information only, but it still gives you that out, should there be something substantial. So you can always negotiate through it. But oftentimes you still see where or it'll be pass or fail, but still, as a listing agent, I would still love the seller to be able to have the option to negotiate with the buyer. You don't want somebody to back out or $500 worth of repairs, but yes, you can always write that into an offer.
Yes, I know sometimes when I have listings, the seller may say, well, I thought it was for buyer's information only. And when I'm on the buyer side, even if I see that it's something that says that it's for information only, just like Beverly said, we can walk away and we can negotiate. And a lot of times when you're already this far into a contract and it's something that is going to come up, or maybe if they have Steve, something more may come up. So once it's there, most of the time they want to work through it. Because if the contract falls through and you run the risk of having another home inspector come in and they may find $20,000 more.
Isn't there something that if you, like if the listing agent knows that there's mold, you have to then, so they then have to let everybody.
Yes.
You may as well fix it.
Steve, I know of people who they use your services not just at the time of purchase. When else do people tend to get home inspections?
Sellers will do it sometimes before listing the house. They will do lately I've done multiple, I have one tomorrow, a 1-year builder's warranty inspection. So most builders offer a 1-year warranty. So we recommend that around months 6 through 8, you schedule that inspection. What else? Someone contacted me recently. They've been living in their house for 5 years. They just want to know what's going on. So you can do an inspection anytime. And we can modify the inspection. You don't have to spend 4 hours going through every nook and cranny. I can just go and look at your roof. I can look at your foundation, things like that. So there are options.
I know my friend, he knows he's not in his forever home. So every year he takes his taxes and he gets a home inspection because he wants to fix whatever is going to cost him the most to not have fixed when he sells.
Sure. Yeah, good idea. He hasn't called me though. Who is this friend?
He lives in DC.
So I think a home inspection, just, thinking of like a single mom or something who doesn't have construction knowledge.
Sure.
I can see where people could benefit from inspection in different ways.
Sure. Any more questions?
Well, Steve also does radon inspections.
Radon testing, yep, that's
And
right.
radon is probably 50% of the homes in our area.
Yes, it is. The Shenandoah Valley is considered a radon hotspot by the EPA. Radon is a naturally occurring gas. You can't smell it, you can't see it. It just comes from the breakdown of certain elements in the soil. Over time, that turns into radon gas, which is the second leading cause of lung cancer in the United States. You have cigarette smoking and then radon poisoning. So that's something else that I do test for is radon.
What homes primarily is it underground basement?
Mostly basements, houses that are slab on grade. I've also found on this. I have found a handful of houses, radon on a handful of houses that are built on crawl spaces. It's not as frequent, but mostly subgrade stuff is where you find it. It's very common.
I'll turn it over to Anna here at the Buzz.
Okay. I'll be real quick, I promise, and I'm going to try to talk loud. Thank you all for coming. We really appreciate your time and your questions, your attention. Thank you guys so much. We have a little present for you. It's small. Thank you so much for coming. Before you leave, there are some informational sheets out there on that white table. We have from, I have my glasses on, JoDee.Lambert here. She has some credit guide information that might be helpful. We had some questions about that. There's a housing homework, a self-checklist for aspiring homeowners, and then we have just some kind of ongoing thing. There's like a home repair volunteers wanted as part of our Sol Housing Initiative with renewing homes. So if you have skills and you want to help, there's this, you can sign up for that. And then Blue Ridge Legal Services and Sol Housing have produced housing help quick tips for families about eviction notices. So this is the only one that we have back there. I will put it back. but you can find those all on our Saw Housing website. We do have 2 more lunch and learns coming up. January 22nd will be in Waynesboro, topic to be determined. If you have ideas, let us know. And then in April 20th, we'll be here in Staunton, at the Staunton Library. We also are going to have a solutions series, which one of our working groups is working on, and that's going to have more of a virtual presence. It'll be recorded, available online, to really talk about what some successful, innovative ideas have been in other communities that are addressing housing, to explain and explore how that might impact our region. So this will be recorded online, and that solution series is going to be coming out as well. And we should also thank Virginia Housing for sponsoring our Housing Hustle event and our solution series, as well as providing supports for our homeowners. So they're pretty great. Thank you all. If you have any questions, we'll all be here for a little bit anyway.
Eat pizza.
Pizza. Yes, meat, veggie, gluten-free. Grab some pizza when you go, and we hope to see you in January, if not before. Thank you very much.